Just- So hi guys, how's everybody doing? Hope you guys had a very good week ahead. So right now I'll be making a video on how to make a top-down analysis of the financial market. Just as you can see, there's something called a trend line. I'll just make a very brief video. This is called TradingView. The platform I'm using is TradingView. Once you go to your Google, you just have to type www.tradingview.com, which is this www.tradingview.com. Once you get this is the search icon here, you just click on the sub heading here, trading view all markets. Once you're done, you just head to the login. You use your email to sign into this trading view. You receive an SMS from trading sorry you receive an email from trading view to authenticate your account. Once you're done, this is how it will look. So once you're done with every other thing, I'm just using Euro AUD. I know I have so many pairs here, but let's just focus on one pair, which is Euro AUD now. I don't know what your favorite pair could be. We have so many currency pairs. So once you come to this platform, you have gold, which is our USD. You have AUD USD, which is Australian dollar versus United States dollar. We have, I want you to take a look at this level where I am showing you. We have USD CHF, which is United States dollar versus Swiss francs. We have Euro USD, which is Euro versus United States dollar. We have GBP USD, which is Great Britain pound versus US United States dollar. We have Dodge USDT, which is Dutch coin versus United States dollar. We have USD JPY, which is United States dollar versus Japanese yen. We have NZD USD, which is the New Zealand dollar versus United States dollar. We have US 30, which is an indices, okay, otherwise known as Wall Street. We have NAS 100, which is otherwise known as Nasdaq. It's also an indices from a stock. We have Euro GPB, we have Euro JPY, we have JPB JPY, we have US crude oil, and we have Euro AUD, which is on the chart here now. So, coming over to the chart, I want you to first understand three concepts or even five concepts here now. Let me type it boldly so you can see it. Okay. First is there's something called trend line. Okay. And then second one, which is um, key levels. The third one, which is known as pattern, a pattern. And then another one, which is also candlesticks, candlesticks. So this I trade price action. I trade price action alone. I don't mix it with any indicators. If you guys know what indicators are, okay. So trend line, key levels, patterns, candlesticks. Let me just use my own tools to draw for you so you understand what trend line is. And also, sorry, I forgot to also include one thing, which is price, yeah. So coming over to the open window, you can see this is what we call the price here. This is the price. All these things you're seeing, removing this, I was the one who drew this. Aside from that, I drew nothing else. So coming over to the chart, this is what we call price. You see as it fluctuates. This is the reading here. This is where it reads. It reads from A to Z here, from here to here. This is euro versus Australian dollar. So this is how the price it fluctuates, goes up, goes down, goes up, goes down, goes up like that continuously. So aside from that, coming over to these three core principles here now. Coming over to these sorry, five core principles: trend line, key levels, pattern, candlesticks, price. So I'll identify each and every one of them on the chart here. Coming over here now, this is what I call trend line. As you can see, there's transversal line like this, and then this is what is called price. As you can see, price is going, and then coming, and then this is the next one I'm about to draw now is what I call pattern. As you can see, it forms some kind of consolidation pattern, and then it goes up. So all of this you can see here now, all of this you can see here now forms within this retracement, and this one and this one also. So all of this you're seeing here, this consolidation, it comes in between, but this is not picture perfect because I want to make it seem like what the nature. I want you to grab the psychology behind what market does at each and every time. So aside from this, this is just the pattern, this is the trend line, and then as a whole, this is price. So now when it comes to candlesticks, this is what I call candlesticks here, so you don't have to get confused. Each and every green, white, green, white, green, white, everything is called candlestick. So one candlestick is representing an open of the week weekly. So on Mondays, the market opens, this is where it starts. Market opens here now, or market opens here, and then on Friday market closes, this is where it closes. Another week market opens, this is here. Another week it closes, another Friday it comes to and closes, this is here now. So by next week market again opens, it opens here now. By Friday it closes, this is where it closes now. So aside from that, this is where I zoom in. I use the time frames to zoom in. This is the weekly time frame. Let me use my arrow key. This is the weekly time frame here, as you can see. Another one is coming. This is the weekly time frame, daily time frame, 4 hour time frame, 1 hour time frame, 30 minutes time frame. I don't know if you guys can see this very well. This is daily time frame, this is 4 hour time frame, another one, this is 1 hour time frame, and this is 30 minutes time frame. So that's how it is. I use this time. Once I press daily time frame, it zooms it in. It zooms in. As you can see this price here now. Let me just highlight it now. Let me press the 4 hour time frame now. You see it will zoom in. You see it continuously zooms in. Let me press the 1 hour time frame. It zooms again. 30 minutes, it continuously zooms in. So that's how it works. Aside from that, let me depict the realistic how the market works accordingly. Like I told you guys, have to take note of these five things: trend line, key levels, patterns, price. That is it, and then you're good to go. So with this, with all being said, I think we'd rather jump into the chart and then know what the market has to give. And overall, understanding what the market is going to do next before you enter a trade, before you buy or sell a currency, is what we call analysis. Understanding what the market is going to do next, understanding how the market is going to fluctuate in the future, going through the chart, understanding those series of sequence of activities happening on the market is what I term and I call analysis. So this is how we go first. You have to first identify the trend. What is the trend of the market? Is it trending upward or is it trending downward? As you can see, market came here and then gave us a consolidation pattern for a buy. This is the pattern I've been talking about. Then we have to evolve the trend line now. We evolve the trend line. This is where the trend line now is. So, but there's something, another one, something fishy over here now. There's something called, what's the name of this? There's something we call key level. It's called key level caps. Okay, it's called key level. So that is it, guys. You have to identify your various key levels. Bear in mind, this is weekly time frame. Now we have already identified our key levels. This is our trend line on the another trend line on the weekly time frame. So you evolve the trend line. As you can see, market keeps on evolving. you evolve the trend line. Now this is the last place that we formed a pattern, which you also evolve the trend line as price has already moved from this level to this level. And there was a reason why price moved from this level, which we are going to find out on the daily time frame now. We are going to find out on the daily time frame now. Okay, I can see something. I'm getting something over here now. As you can see, price, this is another key level here from the tip to the body of the candle. So we've already gotten, this is a pattern. You have to understand that one, those patterns are what lets us know that price is going to continuously go up when they are coming to our trend line. So this is a trend line here, and then this was a pattern that was formed along this level. It's called a triangular pattern. And once this triangle pattern is formed, it indicates that market is either going to reverse upwards, or the market is going to, the trend is going to change. So as you can see, market reversed upwards. Market touched at this level and then reversed upwards now. So we are in still in a strong bullish trend. An uptrend is known as a bullish trend. A downtrend is known as a bearish trend. Then a sideways trend is known as a ranging trend. So let me just use my drawing tool to identify an uptrend. This is an uptrend. This is a downtrend. So this is a ranging trend or a sideways trend. This is a bullish trend or uptrend. This is a bearish trend or downtrend, and this is a sideways trend. Bullish trend, bearish trend, so this is here. This is it. And here you have it. Is a bullish trend. Connecting your trend line, you see it goes up. Connecting your trend line, you see it goes down. Then this one goes sideways. This one goes sideways, as you can see here now. That is what is called bullish trend, bearish trend, ranging trend. So these three things, these three trend is what happens in the market each and every time. You notice that market sometimes starts to range, sometimes it starts to go bearish, like it goes high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Sometimes the market might choose to go bullish trend, which is higher high, higher low, higher high, higher low, higher high, higher, just like that. So that is it for now. Going over to the 4 hour time frame, each time frame you go into, try as much as possible to identify the trend there. Okay, identify the trend. As you can see, before it created this high, market never created a high here. So this is where you should put your trend liner. And then this is the last high it created, and then came to this low. So you should put your trend line here now. So what did price do as it got to this level now? Where is our key level? Let's check for a very strong key level at that place, because we are looking for conferences to which we add into buys or sells. So as you can see over here on the 4 hour time frame, we are having a 1 and 2nd touch now. It's giving us a very strong conference now. So what pattern did price create as it came back to our trend line? This is the pattern it created as it came back to our trend line now. So what you need to know is there are several patterns that price will create as it comes back to the trend line. Okay, this was where the trend line is before. If you evolve now, you see price created this pattern here now, and otherwise known as a triangle pattern. This one also, price created another triangle pattern. You keep on evolving. This was where the trend line started, and then price created this triangle pattern for a bullish trend. Price created another triangle pattern for a bullish trend. Again, the same thing keeps on happening, and then once price comes back to break the trend line, we evolve, and then you see price keeps on creating that same pattern. This one is a flag pattern. Now it's called a flag, just like a Nigerian flag. And then you evolve the trend line again. Just keep on evolving the trend line. Another flag pattern here. Another flag pattern. This is our key level that gives us assurance of buys. So you can see price boomed up immediately, and then keep on evolving. Price did this now. So at this level, we are waiting for price to jump up. This is another pattern now. This one is what we call a channel. Now we are getting a bullish trend, by the way. We are in a very strong bullish trend because price keeps on surprising us with high highs. So this is it now. Keep on adjusting our trend line like that. Going over to the 4 hour time frame, we have to look for strong key levels, confluence levels. Now you have to search this now. Waiting for price to break this level, give us another strong consolidation pattern like this, then we take for a buys. And this is a very good swing trade because our first TP is coming from here, second TP is coming from here. So it's a very strong swing trade. We are waiting for like weeks, like let's say a space of 2 3 weeks, then we go for the buys. But for now, we are going for buys from this level to this level. Already we are seeing some strong confidence key levels here, but we are sure we'll conquer because this pattern we are seeing here has to be fulfilled. The 90% level has to be cleared out. So I'm looking forward for price doing this, respecting all these key levels without breaking like the because this is a double bottom. Another pattern you have to understand is what we call double bottom. Let me draw it out first. It breaks out for a test and rise. A double bottom. This is how it looks before you go to the real life chart. This is how a double bottom looks. Once you reverse it, we also have the one called double top. The double top goes like this. Then majorly when you see a double top in an uptrend, it means a reversal. Once it breaks the neckline, once it breaks this level and goes for a sell, it's reversing all the trend that has been there. If it's in an uptrend, let's say price was doing this, price was initially doing this in an uptrend, and then price reversed, breaking this neckline. This is a downtrend now. The same thing goes with a downtrend. Once price is coming like this, and then as you can see, this is the trend line here. This one is an uptrend, and this is a downtrend. And then price breaks this neckline over here. This neckline to retest. This is a downtrend, and price does the same thing in a downtrend, reversing this an uptrend now. So with all being said, you jump into the live chat, you see that exactly that's what happens here. So looking over here, you see that we are just gonna wait for price to do anything needful. We are looking forward to this happening in the charts. If it doesn't happen, who cares? We'll move on to another setup, strong setups. So, but for now, we look for, you can even use your Fibonacci to understand that this happens a lot. Because price could just retrace all the way to this 50% or even 31 point. Let me input my Fibonacci very well. So imputing it, price might just hit my 0.318 Fibonacci level and then boom upwards. So the same thing happens once it goes upwards up to this level. You have to then put your Fibonacci again from here to here. You see that price hits almost, I think, 50 points or even 0.38 and then continuously go up. That's just how you enter the chart like a pro. So candlesticks, you have to wait for candlesticks confirmation. You see at this level now, it's giving us a bullish candle showing for a buy, but you can't buy because it's yet to break this